Right, time to finally do a video I've been planning to do for quite some time. I just wanted to share my financial results for the last complete tax year, which was 2021 to 2022. So it ended on 5th of April 2022. The reason I thought I'd share it is quite personal information, this, but when I set out doing this channel, one of my key things was because when I was looking to get into this sort of work, being a self-employed owner, driver, courier, doing light haulage, plenty of videos out there, but it's hard to sort of get a real taking of how much money you can earn for whatever effort you put in. So regular viewers will know when I do a proper week in life vlog, at the end I'll always share, I share for the week what I got for each job and stuff, and particulars about the jobs I think of interest or relevant. At the end I also do a summary of my takings for the week and costs and roughly what I kind of earned that week, which is profit after obviously takings minus cost. And I thought I'd do the same for the whole year. Had a decent year in the end, which I really needed, reasons for that I'll come on to. Some people say, it's a bit, I don't know what the word is, but not very British to sort of talk about money and all that kind of stuff. But, part of the reason I want to keep my identity private as well, so I can be a bit more honest about this kind of stuff. So here it is, just calls on the doors kind of thing. So yeah, that's kind of like what I'm doing, why. So it's important to sort of take these results in the context of how I work. Obviously, if you're going to be a self-employed owner, driver, courier doing light haulage, it kind of depends how you do it. There's a lot of different ways you can do it. You're going to stay local, are you going to do long jobs, do you have to be, you're going to be getting home every night, or if you're staying away, you're going to stay away in accommodation, or you're willing to stay in a van to save money. Tramp. So anyone who watches my vlogs and stuff, or like on and off, or like consistently, will know how I work and what it's taken to earn this sort of thing. But if you're not familiar with my channel and you're just going onto this thing, basically the way I work is I get my first job on a Monday, and I try and go long distance from where I'm based in the Midlands. So obviously being in the Midlands, you can't get that long a job. I don't go to Scotland anymore. And then from there, I just go anywhere really, within reason. And then on a Friday, I obviously have to get home on a Friday, because the CX where I get all my work from in this van goes quiet over the weekends. I've never bothered working the weekends, and I enjoy obviously having my weekends to myself anyway, or with the family and stuff. So yeah, I am away. I do tramp. Sometimes I manage to get home during a week just because it works out that way, but I don't really target to get home during a week. I just see it as a bonus if I get home, and get to spend a night at home. So yeah, that's not, that kind of lifestyle is not for everyone, and I wouldn't have earned this much. I'm not saying it's a lot of money the way I work. Some people will say it's not. But yeah, don't think you'd earn sort of similar if you were trying to get home every night and you're just relying 100% on the CX or any other load platforms for work. Because what you've got to remember with all these load platforms such as the CX, it's all backload rate on work on there, because you're subcontracting to the contractor who has the contract with the end customer. So they're not taking a cut of your job, you're just doing the job on their behalf, and they keep obviously some of the whole fee, otherwise they just wouldn't pass it on, would they? That has to be something in it for them. If you've got your own customers, then that's a different way of working. You can just use the CX to try and get home after you've done your own customer and earned more money on your outbound job. So that's the context. So my setup in terms of how I'm set up as a business, so even though it's just me, one-man van, as simple as it can be, me and my van, I'm still a business, and you have to think of yourself as a business. It's not a job. I don't have a job really. I don't see it that way. I run a small business. I do jobs during a day. Say every job I do in a day, that's a job kind of thing. So I've done 2 jobs today, 2 collections and 2 deliveries. So yeah, you got to get into that mentality. I think if you're going into it, you've got to be quite professional about this stuff. In terms of my setup, I'm not going to go into why I'm set up this way because it just drag on. I might go into that a bit more in the future, but if you are setting up, you need to do research yourself into what the options are, read into each of them options and decide, do some rough calculations, or if you're not really good at that kind of stuff, maybe you know somebody who is, or maybe even seek professional advice about what's the best way for you to set up as a company. If you do seek professional advice, make sure you're going to somebody good, I'd say, who is giving you like good, honest, genuine advice, rather than just giving you like basic advice and charging you for their time or whatever. That's where I struggle with using accountants and stuff like that. I think it's hard to find a really good, honest, professional services, as they call it. But anyway, in terms of my setup, I'm set up as a sole trader. My other option was to go set up a limited company and work through a limited company. So if you set up a limited company, that's a separate legal entity, and then you become like the director of that, and then you get paid by your own company kind of thing. But I just kept it really simple, sole trader. And in terms of VAT, I am VAT registered. I'd recommend, if you're doing, obviously this isn't legal financial advice because I'm not qualified to give that or anything like that, but I'm just saying basically how I'm set up and why I've chose that to do myself. But if you're doing CX type work, personally it's beneficial to be, in my view, to be VAT registered. A lot of the companies you do work for kind of expect you to be VAT registered. There might even be some that won't deal with you if you're not VAT registered, just for their company policies and stuff. You find that with some bigger companies. And because it's all on a CX, it's like you're subcontracting to transport businesses, so you charge them VAT, and they charge their end customer VAT. But what you're charging them, they're just going to claim back anyway, so it doesn't actually cost them anything. And being VAT registered yourself, so me personally, it means I could either claim back all my expenses individually, keep track of them and claim them back. But I'm not, because I worked out I was better off on the other option, which is only an option for smaller companies, such as myself, obviously being really small, is to go on a VAT flat rate scheme. So on a flat rate scheme, basically it works out, I don't obviously charge the VAT to my customers, but I don't claim back individual expenses. I just keep a proportion of the VAT I charge, and then the rest of it I send straight to the Inland Revenue, HMRC. Every quarter I have to do my VAT return. Simple enough, what has been so far. Mandatory, got to do it, making tax digital now, which is going to be right ball ache for me, because I've got a bit of a gripe about that, but I won't get sidelined with that. So I'm on a flat rate scheme, which basically means for every £10 of VAT I charge or gets added on top of jobs, I keep £4 of it, and £6 goes to HMRC. But because VAT is charged at 20%, it means for every like £100 job I do, which will be plus £20 VAT, of course, I get to keep £8 of that. So it's 2 times 4, it's 8. So I keep £108, and £12 I send to HMRC every quarter when I do my VAT return. So that kind of boosts my taxable income. That is taxable as well. So that's seen as taxable income. So it's just kind of like adds to your taxable income kind of thing. It makes it simpler, and I worked it out, did the maths. There's also some other things with the van, claiming back the VAT on the van. So I can't claim back individual expenses, but you can claim large capital expenses they call it, anything over £3,000 including VAT, which the van was obviously, so I still got to claim for the van because it's vast majority business use. I did it on the traditional VAT scheme, where I claimed back everything individually. I wouldn't have been able to claim back in the van because I do use it for a very small amount of personal mileage, less so now. Now I've got a car, which I got earlier in the year. But yeah, I worked out I was better off in a flat rate scheme. And then other things you got to choose. You've got to choose whether you're going to claim your expenses back in terms of your actual expenses. So you're going to claim back all your fuel, all your tyres, all your servicing individually, all your insurance, and then you can also claim for things like van depreciation as well as an expense. It's all explained on HMRC website. Or you can just use a flat rate scheme for mileage, which is 40p a mile for the first 10,000 miles, and then 25p a mile for any mileage after that. So say I do, last year I did about 50,000 miles, because it went quiet towards the end of tax year. It would have been more like 60, but it kind of like, I didn't use a van. I started doing flex towards the end of the year because the CX was just so quiet, so that saved me putting miles on the van. But yeah, it just worked out better for me doing it that way. It's also a lot simpler. But the thing is, because you do so many miles, I worked out, like this time last year when fuel was hadn't gone up a stupid amount as recently, I was paying 15p a mile for fuel, and then it was about another 15p a mile on top for everything else. So van depreciation, insurance, servicing, wear items like tyres, brakes, that kind of stuff. So I was at about 30p a mile all in. That's variable costs, so I didn't include insurance in that. But anyway, yeah, that doesn't include insurance, sorry. That's a fixed amount, fixed costs. So it was kind of working out alright, but then it's gone up a stupid amount recently, so I'm paying like 25p a mile now just in diesel per mile. But anyway, that's what I've chose to set myself up at as. Yeah, so that's a bit of context why I'm doing it, how I work if you're not familiar with it, and how I'm kind of set up in terms of my options as a business. So in terms of number of days I've worked, so I've said many times, I've done a video on fixed costs. If you go back, it's probably one of the best videos you can watch. I've done anything about, got a sub playlist, Money Matters I think I called it, and it's more about, you know, the financials and all that kind of stuff. I do plan to do more if I get around to them, but you can watch my vlogs, what I'm doing day to day and what I'm earning on jobs, what my takings are, what I'm earning at the end of the week. But I'd say if you're thinking of getting into it, or even if you are and you want to compare your costs to mine, or maybe you just haven't truly worked out your costs, you might want to have a look in there and might be of some help. So my daily costs, I always base them around, so things like insurance and, you know, CX subscriptions and other stuff like that, which is a fixed amount for the year. Vehicle tax, that's another one. You can't divide them by 365 days a year because you don't work 365 days a year. You can't even divide it by 52 weeks of the year times 5 days working, because nobody works 52 weeks of the year. Even if you want to, you're not going to, because you're going to have problems with your van, you're going to have other stuff that comes up, and you're going to want to take holidays because you got to live. So I've always worked off 46 weeks of the year, which is kind of the same as what you'd get in a job. In a normal job, you know, you get like 28 days holiday, don't you, which is kind of like 6 weeks off. So 46 weeks of the year times 5 days is 230 days. So that was what I was kind of targeting to work. In the end, I worked 222 days, of which 200 were van days. So in the van, on the run, all my work was off the CX. So it was all subcontractor work. So it's all at a backload rate, and I was, you know, obviously working in that willing to tramping is my sort of standard operating way of operating. And I did do days in the car doing flex, so Amazon Flex, delivering in my car, which is something I did before I had this van, before I set up as a proper courier with a van on the CX and that kind of stuff. So yeah, I only went and did that. I basically didn't do any from April 2021 until, well, I didn't do any in 2021 in tax year. I saw it certainly from April to the end of 2021, and I didn't have any plans to do it until the end of the tax year. But those who are on the CX or follow my vlogs or anyone else's vlogs will know the CX normally goes quiet first part of the year. But I said before, I joined it just before COVID. So when I started, like late February, early March 2020, I think it was. Yeah, it would have been, wouldn't it? It was reasonably a bit busy then, you know, like, yeah, I was doing all right in early March, so I thought I was all right. So by the end of last year, kind of the COVID thing had kind of gone away a lot, restrictions and stuff. I was expecting or hoping 2022 to start well, or not be that quiet lull period, not to be too long, but it just didn't turn out that way. I really struggled pretty much all the way through till the end of May, and it started picking up finally in June. A number of jobs on the CX, but obviously by June, Putin had invaded Ukraine, and the fuel price had already gone up before that. Just because, like, the world economy, I think it was getting back, picking up again, and fuel supply wasn't meeting that. But then obviously when the whole war kicked off, fuel prices skyrocketed, so costs have gone up as well in that period. But yeah, so, but obviously, yeah, this actually goes only, because it's a tax year, only goes to be right 5th of April anyway, so it's before that. Kind of got off track there. So basically January through to April was very quiet. Did a bit on the TX. It was pretty demoralising, to be honest. Wasn't very motivated, so worked out I could earn just as much as I was earning on the CX doing some work in my car, on doing Amazon Flex, but the most I could do was like 24 hours worth of blocks, as they call them. So it's kind of like part-time between CX and Flex. Which is relaxed. Got to spend more time at home, more evenings at home, in the early part of the year when the weather ain't particularly great. So anyway, that was, yeah, sort of my setup and the results, number of days and stuff. So yeah, how much did I actually earn? So 18 minutes in now, so if you probably saw the headline, this is probably the number you're waiting for, but we got there in the end. So my taxable income for the year was 54,488.55. That includes the flat rate scheme VAT bonus, which I'd just gone through, and it also includes, I did claim a self-employed income support scheme grant, SCISS, which is the COVID grant for self-employed people. I only claimed one grant in this. It was the last grant I claimed, and it was £2,596. So yeah, it's more like 52 without that, my takings. And in terms of my CX sales, so that's like my taxable earnings. But if I just go by CX sales, my net, so not including a flat rate scheme, which is kind of what I report at the end of every day, end of every week in my, or not every week, every other week now in the week in life. That was basically 45.5 grand, which divided by 200 days is an average of £228 I earn each, per van day, CX day. Like I say, working as a tramper, Something I did want to mention as well, obviously set up as a business, I need to keep track of, I said I'm on a flat rate scheme for mileage, so not a mileage allowance scheme. So I got this little black book which I've kind of shown people before. Through the week I am recording start of each day, whether it's in the van or the car, what the mileage was in the van, at the end of the day what the mileage was, and I work that out and I put it in a spreadsheet when I update my books, and from that's how I managed to get these number of days work, CX and Flex, because I can tell which car I used, or which vehicle I used, should I say. And then at the back, I have that page. The back is where I keep track of my sort of earnings, so like that. So at the top, I've got the week commencing day, and then I've got my fuel card price at the top, and which one I'm using, the one that's in brackets, which is the fuel card showing with the VAT price. That's the one I used that week, used the cheapest obviously. And then my earnings through the week, my total earnings, my mileage, my pence per mile, all miles. So that's loaded and unloaded miles, any other additional charges, so tolls and stuff like that, ULEZ charges or whatever. And then at the bottom I kind of work out my rough pre-tax profit, so my takings plus my flat rate scheme VAT bonus minus my fixed costs, which is still, I will still work off £20 a day to cover things like insurance, CX subscription, tax, any other fixed rate schemes, stuff like bank account fees. So I'd recommend having a business bank account, and definitely have a separate account if you're a sole trader. If you're a limited, you have to have a separate account. But even if you're a sole trader, set up a separate account for your business dealings, and then I basically just transfer my wage from there. It's like set up as a standing order to my personal account. But business account charge, it used to be at £5 a month, now it's like £8 a month or something, so that's gone up. But anyway, yeah, so I work out my profit for the week, which is kind of like my my wage, but it's pre-tax, and I also work out that per day. So I still got, as a sole trader, you just pay the standard taxes you'd pay as if you were working for somebody, pay as you earn, PAYE. So that's income tax and national insurance. National insurance is slightly different, but you pay the same ones, but just slightly differently, national insurance. So that was how much my sort of taxable income was for the business, 54.5, call it K. See, the flex was 2,400 basically, plus the VAT bonus for the 22 days, and then that's income. Expenses, as I say, this is just a printout from my spreadsheet. So this is like the taxes, the expenses. So because the most expenses had to do with the van, obviously, or the vehicle I could say. So I used two vehicles. I used a van. They're kind of both personal vehicles because they're just in my name and I'm a sole trader. But the van is really the work vehicle, and then I got my car, my little Suzuki Swift, which I bought like early part of this year. I never intended to buy it to do flex, but once I bought it and the CX was so quiet, I just started using it for flex as I went through. So the total mileage in the van was just over 49,000 miles, and I did 2,500 miles in the car on Amazon Flex, which is total just under 52,000 miles. So yeah, when I work out the mileage allowance, what I can claim as taxable expenses, so the first 10,000 miles at 45 pence, and then the remaining miles at 25 pence a mile, it works out at, I can claim taxable expense for vehicle costs of just pretty much bang on 15 grand. I should say this covers fuel, covers everything to do with the vehicle. Fuel, depreciation, you know, tyres, everything. Insurance is covered in that sort of thing, so I can't then claim for other stuff separately. So basically that covers all the vehicle expenses. So it covers the vehicle insurance, doesn't cover insurance like I'll come on to the other stuff. Other expenses I could claim other than that, well, accommodation, I was quite surprised, £63.81. And I should also say, because I'm on a flat rate scheme, it means when I'm claiming other stuff back, I can only claim the pre-VAT cost, because I've kind of got my VAT accounted for in my extra income to my business. So anything else I claim for is net of VAT, without the VAT. So £63.81 in accommodation. I was quite shocked. In that calendar year I only stayed in accommodation twice. Thought it would be more, but I found when I'm on the road it's quite hard to actually find somewhere. When you finish, it's just so much easier just to kip in a van. Even in the winter, at least I've got, got my night heater, I've got my camp bed. It's actually quite comfortable. I can just park up somewhere, do stuff like this, film the vlogs, watch YouTube, whatever, by the time I've looked for somewhere to stay, driven there, done dead miles getting there, and if you do get somewhere cheap like 30-40 quid, normally they're pretty dingy places. They're okay sometimes just to get a shower and stuff, but I can get a shower in motorway services. I'll try and squeeze it in. Anyway, banking fees, £86.50. Git and public liability insurance. So you can claim that isn't van insurance. So that's not counted for in the van mileage allowance or the vehicle mileage allowance, because it's not motor insurance. It's separate. Goods in transit and public liability. Stamps, etc. So I use first class stamps. Very little difference between a first class stamp and a second class. Don't have to post every job in terms of invoice and POD, but fair few of them. I was thinking, if you post first class and they get a first class letter, I just think, I did go to second class for a time, and I swear I started getting less feedback left per job. So I went back to stamp first, and I'm sure I'm getting more again. So I think it's worth the extra, or whatever it is. It's not a lot. And that also includes envelopes, stuff like that, paper, ink cartridges for the printer. Comes to basically £302. Subscriptions in this year, it was actually zero, which you might be thinking, how can it be zero when you're on a CX? Because I renewed late February 2021, and they gave me 2 extra months free, so I paid then, but I had 14 months, so I didn't pay again until late April this year. So in that tax year I didn't actually pay anything, so that's going to skew my results a little bit. But I'm paying now. Been on there a year or 2 years or whatever. I am paying each quarter, so every 3 months I pay £205, which is for the sole trader, most basic package you can get, which is absolutely all I need. So tolls, £160, 30 pence, sorry, 160.3. So that includes ULEZ and all that kind of stuff, congestion charges and stuff. Some of them are set up online, auto pay, and then I can get my statements off there, because you need to keep records of all these costs. So if the HMRC, the taxman, does ask you to explain these things, it's all there. So you do need to keep receipts properly. Again, this is something else you need to read up on if you're setting up. I have heard some people say, oh well, I just give my bank statements to the accountant and he sorts it out. I'm pretty sure if you asked your accountant, he'd be expecting you to keep records of receipts and stuff, and proper receipts. So if you're claiming a VAT back, or it's a VAT thing, it needs to say VAT on it. So a lot of places won't give you a proper tax receipt. You have to ask for one. And then tools and PPE, only spent £14.80. So that's things like workwear. So stuff I buy only for work. So safety shoes, which I didn't buy in this period. Even things like this t-shirt and stuff like that, I didn't obviously buy it in this period because I only spent very little. That must have been the previous year. And cargo shorts, cargo trousers, which I used solely for work, and also tools, so ratchet straps. I had to buy a ratchet strap the other day, just because one of the old ones is kind of torn, so I thought I'd better get a replacement for that one. First replacement I've had today. So yeah, total deductions come to £15,781.15. Yeah, so that works out as a profit. So obviously my taxable earnings, which is what I actually earned, plus my flat rate scheme bonus on the VAT, minus my total deductible expenses, which is what I've just gone through, is £38,707.40. That's including that SCISS self-employed income support scheme grants. If I take that out, it's just over 36k, which I'm quite happy with, because especially I was expecting the last part of the year, so January to April, to be like quiet. Maybe January, February, start to pick up in February, and then March be pretty decent hopefully, but it just wasn't. It was just crap on the CX. Picked up now finally in June. So I went and did, as I say, that flex, but I just don't earn as much doing that. That's why I bought the van in the first place. I wasn't earning enough. The reason why I've done this so early, I don't have to do this tax. I don't have to do this and submit it until like January next year, January 2023. The reason I did it as soon as I could after the tax year had finished. Oops, my memory was full on my phone. So how long I've been rabbiting on. But anyway, as I was saying, the reason I did it so early, seems like I could, is because I want to buy a property, want to currently lodge in with my brother in the West Midlands. I want to buy a property, probably going to be a flat. It's going to be like a lower value property in North Wales coast, where I'm originally from. This is where my two sons live with their mum. So obviously want to move back there, want to get my own place. So I wanted to get another year's worth of reasonable books done so I could start applying, because it's a lot harder. There's no such thing as a self-employed mortgage, I've learned. The mortgage is the same, it's just the way you apply for it is a bit more complicated, and they want to see more proof. And part of what they want to see is either 2 or 3 years of decent books. And the way they do that, most of them, is by looking at your tax return. So once you've done your tax return, print off a form, I think it's SA 302, and then they take that as your earnings. So yeah, got that sorted so I could start approaching mortgage brokers who specializes in do a lot with self-employed people and applications for mortgages, which I've done. Been told I can easily enough get approved for the sort of value I want to get a property. But now it's gone really quiet for the properties I want to buy, so I'm just hoping, just have to be patient. So I've not seen anything yet, but that's something else. If you go self-employed or limited company, I think it's even more complicated when it comes to getting mortgages and stuff. So that's something nobody ever tells you, so just bear that in mind if you're planning to get a mortgage, get a place, or maybe you've got a place and you're due to remortgage shortly. It might be worth sticking with what you're doing now until that's sorted and get it fixed for a few years, and then go self-employed or working through a limited company, and then you've got time to sort of build up the business, so when you do have to remortgage or mortgage or whatever in the future, you've hopefully got enough proof. That'll be my recommendation. Just something else worth adding. So yeah, that is basically my financial results, my tax return values and stuff for the 2021, 2023, 2022 year. I did it all myself, so I keep my own books in terms of mileage records, in terms of how much money I'm making coming in and expenses and stuff. It's worth saying, as an owner-driver courier, I think, doing light haulage where you do a lot of miles. So I only did 50,000 miles in the van. In a busy year, that could easily be 60, 70,000 miles. And the fact that I tramp keeps mileage down because I don't just drive home empty at the end of each day, regardless of where I am. If I did that, the mileage would be way more, which is why it's just not financially viable for me. Not as somebody who relies on backload rate work or subcontractor work 100%. Yeah, so where was I? Getting a bit lost now. Yeah, I just don't think whether you do your actual expenses or flat rate, not the flat rate scheme, sorry, the mileage allowance for expenses, either way, it's not really, doesn't really cover your true expenses. Because in that mileage allowance is an allowance for depreciation on the vehicle you're claiming for. So depreciation is the loss of value of the actual asset, the vehicle. So as something gets older, gets used, gets higher mileage, obviously the value comes lower. So that's depreciation. If you do it either way, the thing that devalues a van like mine used for light haulage is three main things: age, isn't it, condition, and mileage. So doing what I do, the thing that dictates the value of the vehicle is the mileage. It's the mileage, because the mileage is high for the age of the vehicle. So I've just done 75,000 miles. I've had it since January last year. So yeah, what's that? 18 months. It's done 75,000 miles, which is low really, purely because of COVID and just generally being a quieter period off and on. And the allowances, either on the traditional one where you claim a percentage of it per year, or doing it on the mileage allowance, it just doesn't cover it. So my true costs are probably higher than this, but it's all I can claim. Using the mileage allowance gives me the highest I can claim, so that's the way I've done it. Because that's just being clever about tax and choosing what's best options best for you. So that's tax avoidance, which is legal. Obviously tax evasion isn't illegal, and that's when basically you don't declare income or something like that. You knowingly don't declare some income, so you pay less tax. That's tax evasion. That's what you can end up in prison for. Tax avoidance is perfectly legal. You've got some options. You choose whichever way is best for you to limit the amount of tax you pay. It's perfectly normal. That's why they have tax advisors and wealth advisors and stuff. So yeah, I choose to do my own books because it's quite simple. Quite enjoyed doing the research about how best to set myself up and getting an understanding of what I can claim for and what I can't. I just think it's best, if you're going to get into business, even in a simple way, then it's not much to read up on. And if you do want to progress the business, I think it's a good place to start to actually understand where you stand and have a general grasp, or at least enough grasp to do it as a sole trader, the real basic way. If you do then progress to employ people and set up more of a proper company, you're kind of not just relying on asking somebody's help and paying for that help, tax advisor, accountant, whatever. As I said, I'm always professional services, be it solicitors, accountants, all that kind of thing. I always wonder, are they giving me the best advice here to limit my tax liability, or are they just sort of doing the basic, taking my fee, whatever I'm paying them, for the minimum amount of work they have to do? That's it, isn't it? I mean, I think you need to know your bit yourself, so you can question them at least, and say, all right, am I better off on the flat rate VAT scheme or traditional VAT? Am I better off on the mileage allowance? If I am on a mileage allowance, what's the difference between that and actually claiming my actual expenses and get the kind of thing? Are they doing it properly? So you at least know a bit, so you can ask them and get a grasp of, all right, do they know? Have they worked it out? or have they taken it in consideration, or have they just like done what's easiest for them and then charged them for their time or their fee or whatever, fixed fee and thing. So yeah, that's why I've never had an accountant. I've had, I sold a house, I bought a house in the past. I had to deal with, solicitors and conveyancing and all that kind of stuff. I just a similar kind of profession to me. I just really struggle with them. I've trust issues, I suppose. But yeah, I'd prefer to do stuff myself, and I think it's good if you're going to be in business to understand them anyway, as I keep saying. So yeah, anyway, that's my tax year and stuff, and why I do the tax myself. If I do in the future, well, I should really say about next year, this year, so 2022, 2023, it's going to be quite a year, because so I didn't get busy until starts to become until June. So May was a very quiet year, quiet month as well. It's this new tax year, and also I've got a lot going on this year. So I've lost quite a bit of time anyway with like van issues and other bits and bobs going on. So I took days off to do other bits and bobs. I want to buy a property, which means I'm going to have to take time off, most likely, to go and view properties, do all that kind of stuff. When I do get a place, I'm probably going to take time off to move in. It's a good thing about working like this, it's really flexible, but it means I'm going to miss days work doing that, and then wherever I buy, I'm probably going to need some work, some of which I'll do myself. So that's more time off. I plan for this to be my last year self-employed for now, at least. I'm going to do my HGV class 1, so C&E or whatever. I'll take a truck license. So I've had my medical, waiting for my license back, for one provisional, and going to probably take some time off. I'll try and do the theories and stuff, try not lose a day. I'll try and do that on the weekend. But I'm going to obviously take time off to do the lessons, probably at least 2 weeks, and the tests, the actual driving physical and tests. So there's 2 weeks gone, and then at some point, either late this year or beginning of next year, I'll sell this van, and go most likely on the books with a transport company as a class 1 Arctic driver. Looks like doing tramping. I'll do that for a while to gain experience, and then maybe in the future go the owner driver route in a truck, whether that's an Arctic or a rigid, who knows. But I might land in a good job and think, what's the point? I'm earning good money, I haven't got any of the stress, I don't have to update my books on the weekend, which isn't a massive job, but it does become a bit of a chore. I don't have to check who's paid me and who hasn't, and chase people up who haven't paid me. I don't have to do VAT returns, I don't have to do tax returns. When I do want to buy a property, remortgage a property, it's so much easier. There's quite a lot of things that would be a lot easier just working for somebody else, but I'd lose the flexibility. So anyway, that's what I plan to do. So this year's going to be a lot of change going on. It's going to be, I'm not going to earn this amount of money again, but I'm okay with that, because I'm not somebody who like lives on a breadline all the time. I've got decent savings and stuff. The way I've always been, I've never liked to live paycheck to paycheck, because you can't live like that. I'm just not like that. Yeah, so that is it. Very long-winded in the end, but it's quite a lot of information in there. Crammed in a lot, I think, but how I'm set up and tips and stuff. But I'm interested to know other people, how you're set up, any tips for either me or anyone else who watches this, who's thinking about it. If you're thinking about getting into it, you can ask for my opinion on it. But obviously, like I say, I'm not giving financial advice here. It's just kind of explaining how I'm set up, why I chose to be set up that way, and how I've kind of done sort of financially. Yeah, so that's it. Right, so just thought quickly, I better add a little bit, because I just watched it back. So when I said what my taxable earnings, sorry, not my taxable earnings, my actual, what what went down in my profit, the 38k for the tax year, that is my profit as a business, which is kind of like the salary of someone. And because I kind of worked more like 44 weeks, it took me 44 weeks of working to earn that 22. So I worked slightly less days than like a normal person would work in a job, you know, working for a company, pay as you earn or whatever, and that's what I earned, 38k. So obviously that is what I pay income tax on, which is the same income tax rate as anyone else. If you pay as you earn or whatever, that's the same. And then I pay national insurance contributions on that, which is kind of similar to if you were just pay as you earn, like working on the books for a company. Slightly different, but pretty much the same thing in terms of what you pay. So that is not my take-home pay, so I just thought I'd better add that just in case anyone sees I'm taking home 38k. Yeah, absolutely not. That's just what my taxable, my profit, my salary kind of thing for the year, equivalent salary if I was in a normal job. Yeah, so that's it. Cheers for watching.